Hey, this is Matt from InvestiQuant. Today is Tuesday, October 20th, 2020. And yesterday we saw the markets gap up and then trend lower all session long. We ended up with a really wide range day. We had about 83 points of range in the S&P, heavy volume, closing right down on the lows. So what I wanted to do today is take a look at what has happened historically following a trend day down like we saw yesterday. So I'm going to go into Discover here, and I am going to select all four instruments. The setup I'm going to use is based upon getting long at the open, which is 9:30 a.m. Eastern Time. It will exit at the close, which is 4:15 p.m. Eastern Time. Currently, we are trading up following that trend day down yesterday. So for opening filters, I'm simply going to use gapping up after this trend day down pattern. And I'll be honest with you, depending on where we open, some of these stats do change a little bit. So this is an area where as we approach the open, you'll probably want to go in and examine some different opening locations that are going to be a little bit more precise to where we're opening at today. Right now, I have no idea where we're going to be opening at. We're currently trading just under the midpoint of yesterday's session. But for this test, I'm simply going to use gap up. Next, I'm going to go into the price patterns, and we're going to create this trend day down pattern. And there's all kinds of ways you can do it. One of the simpler ways to do it is to simply say that we closed under the open, which is right here in the location last open and close, and then go into profile patterns. And market profile has several different day types available. One of them is a trend day. So if I select trend day within the market profile pattern section, it will create the trend day pattern. And the definition for the trend day here is looking at things like opening in one quartile of the range and closing in the opposite, and then getting range expansion. There's a little bit more details too, which is available in our help section. But generally speaking, this is a good trend day definition, but there's other ways that you can define it within the price pattern section. If you have your own custom way of defining trend days, you could do that within the price patterns. For this, I'm simply going to use our pre-canned definition here of trend day. And then lastly, I'm going to go into the indicator section, and I'm going to say we are below a 10-day moving average now and above a 200-day moving average. So we just crossed that 10-day moving average yesterday. Now I'm going to hit view results. And before I hop into these results, just a heads up, if you have not signed up, we're going to be doing a webinar today after the close, where we'll be looking at some historical tendencies that take place in varying degrees of bullish and bearish markets. It'll be a brief educational webinar that should be helpful for most people. We won't keep it too long. We're going to aim to keep this around 30 minutes, and we're going to do it right after the close today at 4:30 p.m. Eastern Time. If you haven't signed up, there's a link below this video where you can sign up for it and join us this afternoon. So we'd love to see you there if you can make it. All right, let's hop into the results. So these are the results of going long at 9:30 a.m. Eastern Time, exiting at the close 4:15 p.m. Eastern Time. When you gap up following a trend day down, this is taking place below a 10-day moving average, but above a 200-day simple moving average. Historically, the S&P has 70 samples here, the NASDAQ 93 samples, the Dow 60 samples, and the Russell 56 samples. And looking at the win rates on these, the S&P coming in a little bit weak, not super weak, but 47%. The NASDAQ is the strongest of the group. It has a 56% win rate for closing above the open following this type of pattern. The Dow, 48% win rate, and the Russell is the weakest at 43% win rate. And if we take a look at the average win to average loss, you can see on the S&P, the average loss is bigger than the average win. That is not the case in the NASDAQ. The NASDAQ, for whatever reason, is different than the others. You can see it here in the equity curve, how it is pointing up here in recent years, whereas the other three are pretty similar, and they're just kind of grinding lower over the course of history. But with the NASDAQ, you've got a little bit larger average win than loss, which was not the case in the S&P. It is not the case in the Dow. The Dow, the loss on average is bigger than the win on average. And in the Russell, the average loss is larger than the average win. So 3 of the 4 instruments here have been a little bit weaker historically, but the NASDAQ is doing something a bit different. So 3 out of 4 historically have been a little bit skewed to the downside, with the average losses being a little bit larger than the average win. So hopefully you found that helpful. Good luck today, and we will hopefully see you this afternoon.